Nvidia, a powerhouse in the tech industry, is on the cusp of reporting its Q4 earnings, and the stakes are high. The prevailing hype around artificial intelligence has set heightened expectations for the company's performance. As we delve into the historical stock behavior surrounding earnings reports, we notice a recurring pattern: initial weakness often gives way to potential rebounds. Investors should take note of this trend as it could provide valuable insights into short-term market dynamics. As of the latest data, Nvidia's stock has experienced a 6% decrease, bringing its market cap to a substantial $1.68 trillion. The forward price-to-earnings (PE) ratio stands at 33.2, signaling a reasonable valuation, especially when compared to the 5-year mean. However, despite recent stock increases, the average analyst price target consistently surpasses the actual stock price, with some analysts revising their targets upward. This suggests a bullish sentiment among experts, indicating confidence in Nvidia's growth potential. Examining the company's performance, Nvidia's robust business growth is evident in the AI application software, hardware, and data centers segments. This correlates with the substantial increase in the stock's value. The current phase in AI development revolves around infrastructure building, and Nvidia is playing a crucial role in both hardware and software aspects. With a focus on software growth, technologies like SDKs, Omniverse, and CUDA are expected to drive significant expansion in this segment. Turning our attention to the eagerly awaited Q4 earnings, consensus expectations point towards a market-shaking revenue exceeding $20.53 billion, showcasing a staggering YoY growth of 239%. The anticipation of adjusted net income nearing $11.5 billion and adjusted earnings per share (EPS) projected at $4.63 reflects strong YoY and QoQ growth. These figures, if realized, could further solidify Nvidia's position as a key player in the tech industry. Cash flow, a critical metric often overlooked, is expected to be $1.26 billion, signifying a remarkable 94% YoY increase and a substantial 45.5% QoQ increase. The emphasis on cash flow is warranted, as it is a key indicator of a company's financial health and its ability to reinvest in growth opportunities. Examining revenue by market platform, data centers are forecasted to be the fastest-growing segment, while gaming is predicted to be weaker in the current quarter. This shift in focus toward data centers aligns with the ongoing trend of increased demand for AI and cloud computing services. However, it's crucial to consider the potential impact of regulations on Nvidia's sales to specific regions. Anticipating a decline in affected areas, it is expected that growth in other regions will offset these losses. The dynamic nature of geopolitical factors adds an element of uncertainty to the equation and requires vigilant monitoring. In a landscape teeming with competition, Nvidia faces challenges from other tech companies attempting to develop their own chips. Despite this, Nvidia's current market dominance remains a formidable barrier for potential competitors. The company's strong presence in AI-related hardware and software positions it as a leader in an industry poised for continued growth. Taking a glance at technical analysis, Nvidia's stock charts reveal a recent high at $740, with its current proximity to the 20-day moving average. Overbought conditions on the weekly chart suggest caution, as this could potentially lead to a correction. Investors should keep a close eye on these technical indicators, as they provide insights into the stock's short-term movements. Looking ahead, an expected stock movement of 11% after the earnings report indicates potential volatility in the market. While this presents opportunities for traders, it also underscores the importance of risk management for investors. The market perception is optimistic, anticipating a positive reaction to a robust earnings report. Forward-looking statements from Nvidia regarding AI developments in the latter half of the year could further fuel positive sentiment. In conclusion, Nvidia stands at a critical juncture, with its Q4 earnings report poised to make waves in the market. The company's historical stock performance, current valuation metrics, and strong business growth paint a promising picture. However, challenges such as potential regulatory impacts and competition should not be underestimated. Investors should approach the upcoming earnings report with a strategic mindset, considering both the short-term market dynamics and the long-term growth potential of Nvidia in the ever-evolving tech landscape. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.